The new Black Wall Street. Do it right, feel well, live life. Economic empowerment, real tips, insight on the new Black Wall Street. It's on the new Black Wall Street. He's your host.
All right. Good morning, my beautiful people. Good morning, billionaires. This is ERGJ, your certified financial educator, CEO of ERGJ Enterprises, ERGJ Black Bazaar, and international best-selling author of the book, The Black Billionaires Club. It's a study of Black wealth, a study of the 12 richest Black people in the world today and how they built their wealth. And I just believe that if you want to be wealthy, you should study wealthy people. Well, guys, not only is this a book, but it's actually a club. It's a club of people, brothers and sisters coming together, saying that they are serious about having success this year. And what do we do in this club? Well, we focus on a few things, guys, that you get benefits for. And I want to make sure that you're aware of that because you have an opportunity to join that club if you decide to do so. It takes a decision. We do have financial literacy classes. Why am I doing that? Because I've been wanting to teach Black folk about money for a long time. I just haven't found the right avenue to do it. To do it for free doesn't make sense, right? Why? Because money is the exchange of value for value. Everybody putting console in the exchange. And what we don't pay for, we typically don't value. So just like any other education, I think you should pay for learning about money, because guess what? If you don't pay for learning about money, you're going to pay for it with your money. We got a new Black Wall Street book club. That's where we actually focus on personal development and business development, and we're helping each other to become a better version of ourselves and also helping us to grow and scale our businesses with strategy and structure. And we also have profit opportunities. That's right, profit opportunities through our distribution network. We're going to give you an opportunity to make money. So not only are we going to teach you about money, we give you an opportunity to make more money. And then last but not least, guys, we do have the next level of membership available to you guys for those that want to invest, those that want to learn how to make their money work harder for them than they work for it. We just launched this just today. This is our silver membership. Is going to come with the opportunity, eligibility to be a part of our investment club, and also investment education to teach you how to make your money work harder for you than you work for it. And so that is available unto you, $9.99 a month or $19.99 a month, to get with brothers and sisters to separate yourself from the crowd. Separate yourself from the crowd of broke. Separate yourself from the crowd of complaint. Separate yourself from people who not doing what who want to talk about the problem, but don't want to focus on the solution. Financial literacy is our solution to economic whatever that word is. Anyway, good morning to you, by the way. Go ahead and let us know where you're connecting from, what city, what state. Rep your city. This broadcast is brought to you straight from ERGJ Studios right here in Atlanta, Georgia. That's right, in Atlanta, Georgia, Decatur, where it's great. I'd love to know where you are, because we don't know just how far this thing is reaching, this good old thing called internet. While you're doing that, guys, go ahead and hit the like, the share, the watch party button, the follow button, whatever buttons you can hit, hearts, likes, happy faces, it don't matter. Just hit them all. Hit some buttons this morning, because it's time for the Money and Power Show. Now, what do we do here, guys? We focus on learning about money. Black folk talking about money and the market in the morning. Then we've got a wonderful show set up for you. We do have the stock market recap. We're going to be looking at what happened to stock, and I'm super excited to go over this. We're going to be digging into the Dow. We're going to be looking at Walt Disney today, the Disney company. We're going to do a billionaire breakdown, find out what the billionaires are doing, and then we're also going to talk about the fourth largest Black-owned business in America that we're not talking about. And so we're going to focus on what the successful are doing. When I say successful, what the financially successful are doing, because we're all successful, right? In some form, we're going to find out what the financially successful people are doing. And then guess what? We can mimic what they're doing and have similar success in our life, in our business. That's just what it is, man. It's time to get going with the Money and Power. So we're not going to wait, delay, and all that stuff. Make sure you go to theblackbillionairesclub.com, though, theblackbillionairesclub.com, and become a member today. Don't wait, don't delay, don't procrastinate. That's what happens. That's how you get broke. You keep delaying, you keep waiting, you keep procrastinating. All right. So what I like to do here, man, come on over here to CNN, right? That's why I come get this little recap, start recapping CNN. I like this. You can choose any one you want. You can do Yahoo Finance, you can do Bloomberg, whatever. I like CNN because it's big and vibrant and I can see everything. All right. So the market yesterday, man, the Dow was actually flat, down 15 points yesterday. The Dow again is the Dow Jones Industrial Average, what it stands for, and it is the 30 most significant stocks in America. Okay, the 30 most significant stocks in America. So really, what they say, everybody put it down on 30. The 30 most significant stocks in America. This is going to be companies like we're going to look at today: Disney, Nike, Home Depot, Apple. The 30 most significant stocks in America is in the Dow. That's right at 25,000 points, right? 25,000 points to be a part of to invest in the Dow. The NASDAQ was up 98.66 points yesterday. The NASDAQ is a place where you see all the technology companies. It's a technical stock market. You don't just walk. You can walk into Wall Street. It's a technical stock market. So not stock market, index. And so you'll see companies like Google, Microsoft, Amazon, Facebook. They're in the NASDAQ. And then you have the S&P 500, which is up 23 points yesterday. S&P 500, good morning to you. Good morning, billionaires. Thanks so much for joining. You have the S&P 500. Now, the S&P 500 houses 500 stocks, and it's considered the broader benchmark. So when you and I are evaluating our progress, right? We got to evaluate our progress. Like every year, hopefully you do an annual review, right, of your investments, right? Your investments will probably be something like life insurance. Your investment will probably be something like your 401k or your TSP or your IRA. You should have an annual, at least an annual review. Why? Because you need to see how your money is doing, and you need to compare it to see how your money is doing compared to the general market. You got to have a benchmark. Everybody putting on some benchmark. You got to have a benchmark. Now, what this does for you, it allows you to see whether you are performing well or not. It allows you also to see whether the person that you paid to manage your money is performing well or not. Now, here's my question to you. This is where I got a lot of clients. I get a lot of clients. If you paying someone to manage your money and they're not performing well, why are you paying them? Uh-oh. Let me say that again. If you're paying someone to manage your money for you and they're not performing well, why are you paying them? Now, here's the thing. About 86% of managers underperform, yet we pay them. Now, here's the other thing. You pay them to manage your money, but you take all the risk. If they lose your money, you lose money. They don't. So nothing wrong with paying them. I'm not saying don't get a fund manager. My thing is, if 80% of them underperform and we're paying them to manage our money, but they can't overperform or even meet, it's almost like a progress report. Everybody putting on some progress report. It's a progress report. Say, hold up a second. You got a U this year, but I'm still paying you and I'm taking all the risk. It's my money that's on the line for your decisions. But yet you're underperforming. 85% of them underperform. Let me see if I can find that stat for you, by the way. Right? Fund managers underperforming. I want to make sure. One second here. I'll find it later. I don't want to mess up my flow. All right. So let's go back. All right. So that's the stock. That's Dow, NASDAQ, and S&P 500. All right. So now let's keep going. Good morning, billionaires. Are your investments yes, your investments are your portfolio. Yes. Learn to yes. Yeah. Yes. You definitely want to learn. You want to invest in yourself, but you want to learn. You do want to learn. I recommend you learn about your money. Why? Because here's the deal. If you were to go, let's just take your car, for example, and you have no idea, you have not learned anything about your vehicle, and you just take it to go get it checked, and they come back and say, oh, man, you need to spend $5,000 on this repair. But you know about your vehicle. You're like, $5,000 for that repair? That ain't even what's wrong with my car. Like, if you know about your vehicle, then you won't pay that $5,000. If you don't know nothing about vehicles, then you will pay $5,000. It's the same thing with your money, because you don't learn about it, even if you don't manage it. If you at least learn about it, then you can make better decisions about what you do with your money. Yes or no? So not necessarily that you have to manage it. I'm just saying become financially literate. Get a financial education, so at least you can know, okay, man, this ain't right, this sounds all right. At least you can oversee. Everybody putting on some oversee. At least you can oversee your money, even if you don't manage it. What I'm saying is you have to become the CEO of your empire, the CEO of your portfolio. Why? Because it's your money, right? It's what you have worked hard for. It's what you stand to lose based off someone else's decision if you give them the power to make those decisions. It's also what you stand to lose because of your neglect to learn about your money, right? Your money. All right, so our gain is yesterday. I'm super excited about this, by the way. Charter Communications up 14%. Can you imagine that? If you were invested in Charter Communications yesterday, your money just jumped up 14% in one day. General Electric, pretty big company. I got me some General Electric, by the way. It was up 11.65% yesterday. 11% in one day. Facebook, the platform that we are on right now, Facebook jumped up 11% yesterday in one day. Why do I harp on this so much? Because most of us are waiting for a whole year at the job to get a 1% increase. Well, your money could be increasing if you put it somewhere where it gives it an opportunity for a return. You understand? This is a day. This is not a year. This is not a month. This is a day. We're using Facebook. Most of us are using it every day. If I'm talking to you right now, you're probably on Facebook. Why not become an owner of what you use? You're going to invest in it anyway. You like it anyway. You use it anyway. You know what I'm saying? You're on it anyway. Why not become an owner of it? Matter of fact, now I'm not going to, I kind of want to, I'm not going to look at it there because we got a plan. We got a plan. We're going to look at Disney. I sure want to look at Facebook. We're going to get to Facebook though. Matter of fact, we're going to look at Facebook today. I'm going to look at both of them. Yeah, let's go ahead and do that. We'll go ahead and do that. Right? 10% in one day. Now, I'm an owner of Facebook. I feel good about this. I'm like, yes. How about you? So if you want to learn how to become an owner, you want to learn how to buy stock, join the Black Billionaires Club. Right? This is not something I'm going to teach for free. It's not something I'm going to even cover for free. Right? If it's something, because if you want to really learn, you will invest and learn. You spend your money everywhere else. If you want to learn, you will make the necessary steps to invest and learn. I'm not going to teach it to you for free. Free has got you to where you are. Okay, wherever you are financially, free has got you there. If you want to advance, you're gonna pay somebody, right? You're either gonna pay somebody or you're gonna pay for it. You understand what I'm saying? You either pay someone to learn or you're gonna pay for it to not learn. You got to decide what's that gonna be for you. Now, stock market isn't the only type of investment you can make. I'm not saying it's the end all be all. I think you should invest all over. But once you learn the principles, everybody putting also principles. The principles of investing, they don't change no matter what vehicle you use. I don't care whether it's gold, whether it's Forex, whether it's real estate, whatever it is that you decide. Now, most black folks, they want to get into real estate. I'm just trying to say there's other things out there for you and I to consider based upon our situation. Now, you're going to invest in the stock market anyway with your retirement funds. In case you didn't know, you are investing in the stock market if you have a retirement fund. So why not learn about it? It's something that you're doing anyway. You understand? It's something that you are doing anyway. See, with real estate, you're not necessarily doing it anyway. You might be buying a house, you might not. You might be renting. I mean, you deal with real estate, but you are going to work on that retirement fund because you want your money to pay for your living expenses when you can no longer work. And don't be in a position where you get to 50, 60 years old. I mean, let me say this the right way. I don't care how old you are. You can still build wealth. Everybody can also build wealth. I don't care how old you are. I don't care if you think it's too long. It's almost over. I don't care what you think about your age. It's not too late for you to build wealth. And it ain't not necessarily be building wealth for yourself. It could be building wealth for your descendants. It could be building wealth for your community. It could be building wealth for the college that you attended. It's not too late. I want you to understand that it's not too late to start to build wealth. All right. Cody was up 7.48%. Active PLC was up 7.24%. Losers yesterday, man. H&R Block. Whoa, wow. H&R Block. It's tax season. Well, they lost 7.5% yesterday. Tractor Supply was down. PayPal down 4% yesterday. Dividend energy company was down 3%, and DuPont was down 9.23%. Over here to the left is sector performance. This is what I like to look at and see what's hot and what's not hot, what sectors. First, you have sectors, and then you have industries, and then you have the individual stocks. All right, so this is a sector. Utilities is a sector. It houses different different industries, and then within those industries, you'll see the stocks. Well, this is something you'll learn with investment education in the Black Billionaires Club. But I do like to come here and see what's hot, what's not been hot. So utilities has been the hottest industry this year thus far, and consumer durables and energy minerals have been the worst industry thus far this year. But here's the cool thing: even inside of what's been the worst, I can still find some. I can still find some diamonds in the rough. I can still find some valuable companies that are going to hold strong, that are going to still appreciate. It's still going to be strong for my portfolio, even in the industries that have been terrible. That's actually where I shop because I'm a value investor. I like to buy low, sell high. Everybody put it on, so buy low, sell high. That's a principle of investing. Buy low and sell high. Now, you can do a lot of other stuff, but I'm just talking about basic principles, things that people can simply understand. If you go to the market today and you go buy grapes, and your grapes are normally $2.49, and they say, oh, 99 cents per pound for grapes, you're probably going to buy them. Why? Because you're buying low. You're getting more bang for your buck. We can understand buy low, sell high. If you look at real estate in the dilapidated, in the communities that are dilapidated, the real estate is low, and then they buy low, right? They renovate the property, and then they sell high. This is how you get rich. And if you're in retail, what do? You produce a product or you buy a product wholesale. That's buying low, and then you sell it to the masses, the consumers. You sell high. It's the same thing. If this making sense to anybody, if it's making sense to you, say I got it. If it's making sense, say I got it. It's the same thing. All right. So then over here, let me go over here. Oops. Let me go over here. Let me try to go over here. Okay. Over here, you have your currencies, right? This is going to be for you traveling. This is going to be for those that are in foreign exchange. The prices of foreign currencies, right? If you're going to Europe, you're going to Britain, you're going to Japan, you're going to Canada, you're going to China, right? That's the price for those currencies. And here you got your commodities. The commodities is what I like. I mean, I don't know too many commodities traders, but I like commodities because I consider them to be more store of value. Now look at this. For those that are in like carrot bars or you are like a big gold believer, look at what's going on with gold. There should be no reason why you're talking about gold but can't talk about the price of gold. It's $13.25. Now gold has risen. It's appreciated in value as there has been speculation that that the market is going to take. So we can really see that more of the big dogs, more of the fund managers, more of the institutions, what they call, these are the people with billions, with guaps of money. They got guap. You know, we got dollars, they got guap. The people with guap, they're starting to move their money into gold. This is what's happening right now. Now you can't see it because you're not watching money, but we can tell by the price of gold going up that there must be some transfer. By putting on some transfer, there must be some shift into gold from somewhere. Okay. So what do? I follow the money. Everybody also follow the money. I follow the money. That's what I do. I follow the money. Once we learn the money, then you follow the money. Yes, you can buy a gold ETF as well. We'll talk about that as something we cover also in the Black Billionaires Club. How to buy gold. You don't necessarily have to buy a physical piece of gold. You don't have to. You can invest in gold in a lot of different ways. Not just I got to buy gold. I got to try and hold some gold somewhere in my under my bed or something. So oil is $53.75 per barrel. You guys know me. I'm an oil buff. I'm an oil guy. Gasoline across the country, $2.79 for regular unleaded gasoline across the country. United States, silver, $15.98 per ounce. Now notice that silver, although it's we consider it to be the child of gold, you know, it's the baby gold. It doesn't really move as much. It's not really moving like gold is moving. So silver is less expensive, but it's not quite as valuable. All right. It's less expensive. It still has value, still has worth. It still is a commodity. It's still used for a lot of different things to make silver. Silver is used to make a lot of stuff, but it's not as valuable as gold. Corn is at $3.78 a bushel. All right, now look at this. When I say that to measure your progress, right? You could go right now and look at your retirement accounts that you have. You can see how they're performing this year. Well, the benchmark is at 7.87%. So I recommend if you look at your stock, you look at your retirement account right now this year up to this point, and you're looking at 2% or 1% or negative percent growth, something is wrong. Because just simply investing in the markets brought you back close to 7.87% minus whatever you're paying somebody else to manage your fund. So if you're not close to 8%, or if better, if you're above it, you're doing great, right? But if you're not even close, something is wrong. You got to start paying attention to your money, right? It's okay though, because nobody's taught us this. That's why I'm here. That's why we're here. That's why the Black Billionaires Club is here, to teach those who want to learn. Teach those, let me say that again, to teach those who want to learn. Everybody don't want to learn. That's okay. We're here for those who do want to learn. The Dow's up 7%, NASDAQ up 9.74%, which means that if you and I, on January 1st, we made a New Year's resolution, and we're going to become investors, and we're going to invest in stocks. That's our investment of choice. And we don't really know what we want to invest in. We're just getting started. We say, man, well, let's just follow the market. Well, if you follow the market, if you follow S&P 500, your money will be up 7.87%. If you just follow the NASDAQ, these are called ETFs, you could be up 9.74%. If you just follow the Dow, the 30 most significant stocks in America, your money will be up 7%. Why are you waiting all year to get a 1% raise when you can put your money to work for you for 7% in 1 month? Uh-oh. Did he just say that? Yes. Why are you waiting? That's all. I can start right there. Why are you waiting for some job to give you a 1% raise at the end of the year if you overperform, if you do more than just meets your expectation, if you exceed expectations, they may give you a raise. Well, why are you going to wait a whole year to beg for crumbs when you can put your money to work for you for more? How many guys are watching right now? You said, I want to learn about this. If that's you, put in the comments, I want to learn. I just want to know. How many guys are here right now? You're saying you want to learn about this stuff. If that's you, put in the comments, I want to learn. Damien, we got to talk, brother. Got to get you in the Black Billionaires Club, man. You know too much. You are too valuable. You got too much education in this space. We need you over here teaching, brother. I know we talked before. I know you got your hotel knowledge, the trader. We got to build people up to that automatic thing, man. We need you in the club. Make sure you inbox me, ERGJ Enterprise, after this, man. Let's chat. Oh, I got your number. We'll talk. I'll let you know what's going on. All right. Miss Phyllis, if you're a part of BBC, go back being this, put in the comments on hashtag BBC. Just want to know who's already joined, who's already here, who's already a part of what we're doing. Hashtag BBC. See, some people, they not only do they want to learn, they're going to learn because they've joined the club. Big difference, right? I want to do it, but I haven't taken any necessary stuff. Some of these people are already taking steps to start to learn this stuff because they have joined the Black Billionaires Club. All right, let's keep going. Let's keep going. We got a lot to cover, man. We got a lot to cover. All right. I don't know if I'm going to be able to get to Facebook this morning. I don't know. We're going to see. I don't know because it wasn't on the agenda. Maybe I need to stick with the plan. Should I stick with the plan? Anyway, what's the emotion in the market? All right, so the emotion just tells us money that's kind of gives us an idea where if money is flowing. So right now, we're at a 60, which is going over in the greed. It's just rising and rising, which kind of gives me the indication. It's called sentiment that that the prices of stocks are rising, which is good if you're already in stocks. It's not good if you're trying to get in because now you're paying a higher premium. It just depends on what you're looking at. Just saying, generally speaking. Now, my mentor goes by the name of Mr. Warren Buffett, the third richest man in the world. Okay, he says that you should be fearful when others are greedy, and you should be greedy when others are fearful. So I was like, well, Mr. Buffett, what do you mean by that? He said, well, if you're looking to buy, you should buy when it's low. And when is it low? When people are fearful. If you're looking to sell, well, then you should sell when the prices are high. And when are the prices high? When people are greedy. I said, okay, Mr. Buffett, well, I'll just do what you told me to do, Mr. Buffett. You're the third richest man in the world. I don't listen to all these other people who ain't Mr. Buffett. I listen to Mr. Buffett. The third richest man in the world. And I just figured if Buffett could do it and he gonna teach me with his books that he wrote and all the quotes that he has, well, I'm gonna listen to him because I want to be rich. Everybody don't want to be rich. I want to be rich. I don't know what your desire is, but I want to be rich. Okay? That's my desire. Raphael Golden, I invite you to join the Black Billionaires Club. Derek Taylor, I invite you to join the Black Billionaires Club. Right? Cyrus joined. Thanks so much, brother. Thanks so much. Right? So that's what I listen to. Right? I'm a value investor. That's what I do. That's what I listen to. All right? Sure. So that's motion market, man. So I like to look at all that stuff real quick overview. Now let's take a look. What are we doing next? I said we we're going to look at Facebook, but I really don't want to look at Facebook. I mean, I do want to look at Facebook. I want to save that for later. So we're going to save that for later. We're supposed to go into Disney. Let's get into Disney. We're about to dig in the Dow. That's right, digging the Dow. So the Dow again is Dow Jones Industrial Average, right? Dow Jones Industrial Average, right? And here you go, you know, Disney, right? So I'm gonna look at Disney. These are all the companies. Got 30 of them. So we done went through 3M, American Express, Apple, Boeing, Caterpillar, Chevron, Cisco, Coca-Cola yesterday. Previous episode. Now Disney. All right. Now Disney. Hit the like button, the share button, the watch party button, please. We got to get this information out. I'm doing this for free. I mean, my goodness, please invite your people, your friends, your coworkers, your broke people. And we got to learn about money. All right. I invite you to join the Black Billionaires Club to learn more. We're going to go over as much as I can on this free platform, but we're really going to start digging into this stuff. You know, it takes some time, right? I remember going to all those meetings, all those workshops. I was the youngest, and I was the only. The youngest person in the room, and the only black person in each room. 20 years later, the same. Right? 20 years later, the same. Something's got to change. Got to change. All right, Walt Disney. Right now, you can buy a share of Walt Disney for $111.52. Right? You can buy $111.52. For the year, Disney is up 1.71%. Not much growth for Disney this year. That's okay. Disney is still a solid company. Let's take a look here and see what's going on. So Disney trading 110, previous open and close around that. They got they ripped roughly 8.3 million trades per day. This is people buying and selling Disney all day long. It's a $168 billion company. Disney is a $168 billion company. Look at this. Last year, they were up 46% in their earnings. 46% in their earnings. This year, up 1%. Right? Next 5 years, anticipated 6.77%. Revenue growth last year was up 8%. Right? We're gonna be covering price to earnings ratio. We cover price to sales ratio. We cover price to book ratio in our classes that we have on investment education. Of course, again, that means that if you want to get that, you would register. You become a member of the Black Billionaires Club, so you can learn this stuff. They're going to be reporting on February 6th, 5 days from now. Disney's going to be reporting their earnings, and we're going to be learning what their final earnings for 2018. How they did for the whole year and also the last quarter of 2018. They also were projecting how they expect to work, how they expect to do for the next quarter and the next 2 years, I believe. The annual revenue last year, $59.4 billion. Right? They sold $59.4 billion worth of stuff last year. The annual profit last year, after they sold that stuff, they paid all the employees, they paid for whatever it is that they use, insurance, taxes, and all that stuff. They end up walking away with $12.68 billion in profit. That's a 21% net profit margin. I like that number. All right. I like that number. I like that number. 21%. How many guys that run a business? You're an entrepreneur. You're a business owner. You would love to see a net profit margin of 21% in your business. I like that number. The chairman CEO is Robert Iger. That's the person who runs who runs Disney. He doesn't own it. He runs it. Right? Right now, the analysts, the quote-unquote professionals, saying, "Hey, man, it's $111.52 per share." We're looking at based upon our forecast. We mean our guess of the future. That's all they're doing is guessing based upon some trends and some technical analysis. They're saying, "Hey, man, a low for Disney over the next 12 months is $97." You know, that's we projected it could go as low as 97. It could range around 129, and it could go as high based upon our forecast, our guess, to 147. So if it goes just to the middle of what the analysts are projecting for Disney over the next 12 months, that's a 15.7% increase in the next 12 months to go from 111 to 129, 15%. Why are you waiting all year for a 1% increase on your job when you can have your money working for you? Now, this doesn't mean it will go to 129. It just says they anticipate, they project that it could go based upon all 24, how many analysts, that's what they project. Now let's find out what Disney does. Right? I truly believe you need to know what these companies do, all of what they do, not just, oh, I knew I went to the theme park. So Walt Disney is a diversified international family entertainment and media enterprise. It operates through the following segments: media networks, parks and resorts, which we know about, studio entertainment, and consumer products, interactive media. The media work segment includes cable and broadcast television networks, television production and distribution operations, domestic television stations, radio networks and stations as well. Do I like any of the cannabis companies? Sure, I like it. I like some cannabis companies. Yes, that is your answer, Mr. Taylor. The Parks and Resorts segment owns and operates the Walt Disney World in Florida, the Disneyland Resort in California, Aulani, a Disney resort in Hawaii. I didn't know, oh, I can go to Hawaii. Okay. The Disney Vacation Club, the Disney Cruise Line, and Adventures by Disney. The studio entertainment segment produces and acquires live action and animated motion pictures, direct-to-video content, musical recordings, and live stage plays. The segment distributes films primarily under the Walt Disney Pictures, Pixar, Marvel, Lucasfilms, and Touchstone banners. The consumer products and interactive media segment licenses the company's trade names, characters, and visual and literary properties to various manufacturers, game developers, publishers, and retailers throughout the world. What that means is that when people want to use their name, they license it out, and then they can make a game, a Disney game. They get paid for that. It also develops and publishes games primarily for mobile platforms and books, magazines, and comic books. The segment also distributes branded merchandise directly through retail, online, and wholesale businesses. Walt Disney was founded by Mr. Disney himself, Walter Disney, in 1923. That's almost 100 years ago. And it's headquartered in Burbank, California. Now, Disney actually owns ESPN, by the way, and also owns, I think, channel ABC, right? These are things that Disney owns, okay? These are channels that Disney owns. And probably some other stuff they didn't cover. We're going to come back and we're going to look at the Walt Disney Corporation get directly from the horse's mouth about Disney and about their about their investor relations, right? All right, Mr. Frazier got some more information for us. Disney just did a merger or bought more studios a few months ago. Fantastic, absolutely, right? So Disney is moving the group. Now I like to see this. Disney is increasing. They hire more people. They've been hiring more people over the past 5 years. Right, which gives a semblance of some type of growth. Well, why would you hire more people unless you needed them, right? So it looks like they've been growing in operations, which they've hired more people. And I also like to see this because if they're hiring more people, that they to bring them on to work for them, they're paying them, versus maybe a situation where they're doing a lot more contracting than they are actually hiring them as staff. So this is pretty cool because if you hire somebody on staff, like from a staffing agency, they work for that staffing agency or through that staffing agency, and they do work for you. All right. Good morning, Landscape Lowers in the house. All right, let's keep going. I'm gonna skip news. I'm gonna skip charts. Charts and technical analysis. That's something I get paid for. And something we do in the Black Billionaires Club. I invite you to join the Black Billionaires Club so we can look at that stuff. Those analysts, it was 19 of them. 19 of the quote unquote professionals. These are the 19 people who probably run your fund, man, who probably manage your 401k, probably manage your IRA or whatever fund that you are investing in, if you are investing. Their recommendation from the 24 polled analysts, investment analysts, say, hey, it's a good time to buy Disney. Now look at this. They're saying one person said sell. This is last quarter, January 2019. 16 said buy, one said outperform, 6 said hold, and then 1 said sell Disney. This is interesting. 1 said sell. Here you got some forecasts. You have what they did previously and what they expect over the next 2 either quarters or years. So earnings per share last 4 quarters, projections for the next 2 quarters. Last 4 years, projections for the next 2 years. Quarterly, they're saying 11.7% growth. Annually, 1% growth. Right? Sales over the last 4 quarters, projections for the next 2 quarters. Over the last 4 years, projections for the next 2 years. Their projections quarterly 7.53% growth, annually 3.16% growth. So we can really look at this and say, okay, well, here's what the analysts are projecting. And it's like I see all greens. That's pretty good. It's pretty cool. Although the annual growth seems a little small, but Disney has been around for 100 years. So for them to grow astronomically, because they're not a young company like a Facebook, it's not as formidable. But what you get on the back end is you get a strong income. It's called dividends. We'll take a look at that in just a second. Their financials. Their financials. This is where rubber meets road. This is their money. It's their books. You can look at it. It is public information. 2018 net revenues. All that they sold $59.5 billion worth of stuff. It cost them so much money in order to produce that stuff, and they also had depreciation of some of that stuff. If you're in business for yourself, you know what I'm talking about. You had to buy some product before you can sell it. Well, that's the cost of goods sold. You also know that you have some product that's still sitting in your warehouse, or still sitting in your household, or still sitting in your inventory that you haven't sold, and it depreciates over time. You might have to put it on sale in order to sell it. That's what that's saying, depreciation of the stuff that you have bought now. So the 59.5, although they sold all that stuff, it comes down, and now their gross income is 23.8. Gross income, you know what that is, because you get a paycheck. That means that you put in the 40 hours. That is your cost. That's your labor. You traded your labor. You traded your time for hourly wage. 2 weeks later, you get paid. Your gross income 23.8, but you don't get to spend that, right? Why? Because you're going to have the same thing that these companies have. You got to pay taxes. You got to pay your Social Security. You got to put some money into your 401 to your investment account if you're doing that. Your pre-tax dollars, right? Pre-tax equity earned, the same thing, right? So they get paid. They got 23.8 in gross, but then after they paid all that stuff out, taxes and pre-tax dollars and all that stuff that you have on your paycheck, this is like their paycheck. Now they have net income. So they walked away after all that stuff with 12.6 billion that they can spend. The same way that you walk away with net income, you probably get out of the $1,000 that you actually made, you actually walk away probably being able to spend about 700. No difference. This is their paycheck, same way you get paid. Right? So 12.6 billion in net income is pretty good. Okay, that's fine. If you think that they don't pay taxes, okay. If you think that they don't have income taxes as a company, as a man thinketh, so is he. But anyway, income taxes right here, -1.7 billion. So anyway, 12.6 billion is the real number we need to get to. 12.6 billion, what they walked away as far as net income is concerned. All right. Now, your balance sheet, right? Balance sheet would be what they own versus what they owe. And I recommend you have a balance sheet. It's called your net worth. How much you own versus how much you owe. So the assets, what they own, current assets, total assets would be $98.6 billion in total assets of what they own. All the stuff that they own, all of the parks, all of the media companies, everything that they own is here. Not what they're renting, not what they're loaning for, not what they're borrowing for. This is what they own. Here are the liabilities. What they owe is $44.6 billion. So $98.6 billion owned minus $44.6 billion brings them into what we consider equity, the value of that they can distribute to their shareholders. 48.8 billion, right? Strong, right? Their assets, their liabilities is half of their assets. Now, you and I, most of us, as individuals in America, we got it backwards. We got liabilities that are double our assets, if we got any assets at all. The house that you live in, if you're paying mortgage on it, not an asset. It's an asset to you, but it's not an asset to the economy because you still owe on it. That's something that you owe. The car that you're driving that you don't own yet, that you don't have the title, the deed in hand, that is not an asset. That is something that you owe. So America, in America, what happens is we as individuals, as people that haven't been taught about money, that don't have financial literacy classes, and we don't take it, and we don't have a financial education, we end up borrowing and we end up owing way more than we actually own. And guess where that money goes? That money goes to these corporations that then turn your money into assets for them and their people who started the company and their shareholders and their CEOs and executives. We can't get mad, but we can get better. Let me say that again. Don't get mad. Get better. Oh, we might put that might need to be the slogan for the weekend. Don't get mad. Get better. All right. So you said you have a net worth. What's your net worth? Do you know your number? Do you know your number? We're looking at their number, equity, 48.8 billion. Love that, right? What this really means, though, is that if they were to decide, Disney would decide today they didn't want to do no more business. They want to sell out of everything they had. They would still have 48.8 billion that they could pay to their shareholders because their shareholders are investors in their company. And Trey Padgett, my boy Trey, what's going on, brother? All right, man. Net cash flow statement. You got a cash flow. Credit is not king. Cash is not king. Cash flow is king. Continue to teach us every day. No need debating on that. Which one is better? $50,000 in cash or 800 credit score. Listen, what's better is cash flow. As long as you got cash flow, you can move, you can operate, you can maneuver. Right? Net income, starting line, 12.1 billion. We saw that number, right? Now what do they do with this cash? What do they do with this income? They invest it and they also borrow for more. Right? They invest it and they borrow for more. They invest it so they can hopefully make that money grow. They borrow so they can do what they call leverage. They're borrowing against their equity. They're borrowing against their equity. You and I, we typically don't have equity, which means that you and I typically don't. You and I, when I say you and I, I'm just talking about the general population. I'm not talking about you individually. We don't typically have equity. We don't typically have leverage so that we can then borrow against that we can borrow against that equity. Don't get mad, get better. And then the net cash on hand, 116 million. So what do they do with their money? What do they do with their money after all is said and done? What do? They invest it. This is a company that invests their money. Why aren't you investing yours? This is considered their discretionary income, by the way. And the same way you have to, hopefully you might have discretionary income. We have some discretionary income as well. Right? So this is the company's discretionary income. And then what do they do with it? They invest it. And then they borrow against it to begin to hopefully invest more or research and development or grow their company or whatever it is they got to do. All right. So we can learn from these businesses. Why? Because you are the CEO of your household. You are the person who runs, who should operate, who should understand the money that's coming in and going out and what you're doing with it. I want you to become the CEO of your household corporation, your family business. That doesn't mean that you actually have started a business. You don't, I mean, I recommend it, but it don't mean that you have. But you are a business. You got income coming in, going out. You can invest it just like them. You probably have borrowed to get some cash flow. So you're doing the same thing. You're just not looking at it the same way. Your perspective is your reality. All right, now let's take a look, see what's going on. Let's keep going. All right, so that's financial. I'm gonna keep going. Keep going. We're making good. Oh, I don't know how much time we're making. Walt Disney, right? So here we want to look at go directly to their website. Now we done heard from CNN and what they report, but we want to hear from Walt Disney itself. Look what they got. They got a section called Investor Relations. They got it right on the front page. They're looking at people say, hey, come invest in us. Now, the only thing I really want to look at here, I want you to know that you can come here, you look at all this stuff. You know, you can look at, all this stuff. They got it right there for you to see if you're interested, if you have an interest. All right. Report results, some news. I think you said somebody said they acquired something. They announced an extension of exchange offers. Consent provides financial information, announced exchange offers. These are financial reports, annual reports, quarterly earnings. I mean, they got this stuff laid out. SEC filings. I mean, my goodness, proxies. Oh Lord, a whole bunch of stuff. I mean, they not playing no game. They say if y'all want to know what we're doing, y'all come and look. It's all right here. Compensation committee. Lord Jesus. Governance and nominating committee, executive committee. Governing documents, contacting the board. Lord, woo, Lord, a lot of information there. This is why I can get overwhelmed. Be like, man, that's just too much information. I was looking for something in particular, though. I was looking for something in particular. Okay, maybe I didn't see it. Where the hell is the dividend stuff at? Lord, geez, I want to see the dividend. Proxy statements, financial reconciliation forms, I-9, enrollment form, governance. Did I miss something, guys? Where the hell? Dividends. Dividends paid by check. First rate direct deposit. That's that. Disney shareholder. Dividend check. Okay, shareholder.com. I didn't know that they had. What is that? Okay. Here we go. Manage dividend. I don't. Oh, I'm not a shareholder. I just want to see the dividend. And look at this. They got a little purchase a collectible certificate here. You become a Disney shareholder. Look at you and get your little certificate. That's pretty cool. Oh Lord, I'm trying to. Okay, I don't want to. I'm not a share. Oh, okay, so this here is if you actually were an investor directly through Disney, which you can do, right? I'm trying to find it. Okay, that took me back. Okay, let me just do a little search because I really want to see the dividend history. Okay, maybe I have to go a different route. Okay, so that's 2015. All right, so they increased the annual dividend 71 cents per share. This was in 2016 though. So let's look at the last one. That's 2004. Oh Lord, geez, man, I'm going backwards. Lord. Okay, so let me just do it another way. Oh, good old Google. Let's do it this way. All right, we'll go to NASDAQ. All right, so here's their dividend history. So from back to 2012, this is annually. They don't have everything reporting, but anyway, we can see that they have increased in dividend in 2015. It went down. It tells me it probably is some type of stock split in 2015. 66 cents, 71 cents. This is biannual, it looks like. 71 cents. They actually pay a quarterly dividend, 78 cents, 84 cents, up to 88 cents. So we take 88 cents, guys. We just multiply it times 4. They paying out $3.52 per share per year annually. Okay, $3.52 per share per annually. So now what does that mean? We go look and see, okay, well, $3.52 divided by, we're going to divide by this the shares, 111.52, 352 divided by 111.52, and they are paying a 3% dividend. They're paying a 3% dividend at this time, yield. All right, 3%. That's catching you up with inflation. That means that if you just simply own a share, every year they're going to pay you back roughly 3% dividend yield for that ownership if you're to own it right now. Okay, obviously that changes over time because the price of the stock changes. It goes up and down. That yield goes up and down every time that the price changes. But just give you a rough estimate for the Disney stock. This is why it's a rock. This is why it's a 100-year-old company. They've been paying a dividend. You get income. You can start to beat inflation, at least match inflation or beat inflation as well. All right. So that's Disney. Any questions about Disney? Any questions about Disney? What's going on, Trey? Tia, thanks so much. Thanks so much. Make sure you guys hit the like button, the share button, the watch party button, all that good stuff. If you're interested and want to learn more about this stuff, to learn how to invest, join the Black Billionaires Club today. Don't delay. Don't wait. All right, we teach this stuff. I'm just giving you an overview today. Now, it's time for our Billionaire Breakdown. That's right, Billionaire Breakdown. Mr. Lee Shau Key, number 24. He's the 24th richest man in the world. Net worth of $30.2 billion. Now, what did he do? What does he do? He is Lee Shau Key grew up in a poor family that could afford to eat fish. That could afford to eat fish and meat only twice a month. He was poor, grew up poor. He co-founded property developer Sung Hung Kai with Kwok Tak Singh, father of Hong Kong's billionaire Kwok brothers. He started Henderson Land Development in 1976. The property giant now makes up the bulk of his wealth, and he's a dedicated philanthropist. He donates more than $400 million. He's donated more than $400 million towards education over the years. Lee Hong Shau Key, our billionaire of the day. He's 91 years old. He built his wealth through real estate. He's a self-made billionaire. The $30 billion man, Mr. Lee Shau Key. Now, here's how his wealth is built, his net worth over time. Again, that number, net worth, knowing your numbers. Over time, he has grown. 30.3 billion as of March of 2018. The $30 billion man, Mr. Lee Shau Key. He goes on to say this, his quote says this: when I was young, business came first, then wealth, then health, and finally money. Now that I'm old, it's health first, then family, then my business, and lastly wealth. He can say that because he done built wealth. So he said, man, when I was young, business came first. Now, I don't know nobody teaching this in our community that business comes first. Of course, that seems like it's kind of hard to swallow. I'm just quoting what the quote man said. I'm not saying whether it's right or wrong. He just said, well, hey, when I was young, man, business came first. Then my money came second. Then my health, and then my family. Man, how in the world, y'all probably don't like that, huh? Then he said, now that I'm older, now that I'm built wealth, now that I'm a $30 billion man, and I got all that taken care of, I can focus on my health. I want to be here as long as I can. Make sure my family's straight, right? Then my business comes, and then my wealth. Now, I don't know nobody that's teaching this in the Black community. I don't know nobody would even dare say this in the Black community, that you should focus on business first. Wow. Everybody becomes, oh, wow. Disney right now, Mr. Landscape Lowry, $111.52 per share. $111.52 per share. All right, that was our billionaire of the day, our billionaire breakdown. Now we get to the good stuff. You always got to say the best for last. We get into the 4th largest Black-owned business in America. Number 4, the Piston Group. No wonder why. You wonder why it's called Piston? Because there's an ex-Piston who runs it. It's in Southfield, Michigan. Mr. Vinnie, the Microwave Johnson, owns this company, or the CEO, founder of this company. It's an automotive parts company. It staffs over 9,000 employees, and it is a $1.7 billion company. Mr. Vincent, Vinnie, the Microwave Johnson, the bad boy himself, is now a bad boy in business with the 4th largest Black-owned business in America. Why aren't we talking about this, people? Well, we are right here on the Money and Power Show. We hit that like button, that share button, that invite button, that watch party button. The 4th largest Black-owned business in America. Let's take a look and see what's going on with Piston Group. So here's the Piston Group. They got a website, www.pistongroup.com. Energized thinking, all that good stuff. I just want to know about us, right? That's all I want to do right here. Who we are. Piston Group wasn't just founded to make things. It was founded with a vision to make things better. Not just to make stuff, but to make things better. And that begins with building better teams. Totally dedicated to achieving excellence at every level of execution through our combination of experience, expertise, and a deep-seated passion for what we do. Our companies consistently set the standard because our people consistently raise the bar. Everybody put on raise the bar. Raise the bar. Right? We create solutions and breakthroughs, but at the end of the day, we actually really create is value. Now, if y'all who has been following me for a long time, you know I always talk about value. You want to make more money, provide more value. And that has become the purpose that our entire Piston Group family lives and breathes every day, to not just build, but to build value. Everybody can also build value. Again, you want to make more money, you say you want to increase your income, you want to increase your revenue, you want to make more, you increase your profits, increase or build value. Our beginning. Piston Group is a private investment platform founded by industry magnate and NBA champion Vinnie Johnson to build value by creating, operating, growing world-class manufacturing design companies with investments beginning in 1995. In a strong entrepreneurial culture, today's platform has grown to include Piston Automotive, Irvin Automotive, Detroit Thermal Systems, and AIREA. All right? Manufacturing excellence. Piston Group world-class manufacturing facilities deliver operational excellence through employee empowerment. Our team of more than 10,000 skilled engineers and manufacturing specialists proudly builds customer value every day. What are we talking about? The 4th largest Black-owned business in America. Their brands, again, Piston Automotive, Irvin Automotive, Detroit Thermal Systems, and AIREA. So although they may have this conversation about Detroit and Michigan, we got 2 Black-owned companies in Detroit and Michigan that have employees. So it's not that the automotive industry has disappeared. It's just that when we look at the automotive industry, we might just look at the cars that people drive. What about the parts that are inside the cars? Right? All right, Mr. Vinnie Johnson, chairman, founder, CEO. How many people being a perennial fan favorite with 2 NBA rings would mark the peak achievement of a lifetime? But for Vinnie Johnson, it was just the beginning. His championships in 1988 and 89 with the Detroit bad boy Pistons was just the beginning. Let's read about Mr. Vinnie Johnson, the CEO and founder, chairman, CEO of the 4th largest Black-owned business in America. Now, it stands to reason that if you and I, we happen to be Black entrepreneurs, we might want to learn from the successful Black entrepreneurs. That makes sense, right? You want to be wealthy, study wealthy people. This is what I do every day. I study wealthy people or successful people, however you want to put it. Following his success with the Pistons, Vinnie took on a new challenge by establishing Piston Automotive in 1995 as a means of creating economic vitality, jobs, and opportunity in Detroit. He cared about the city enough to provide economic opportunity, to bring jobs to Detroit. I salute you today, Mr. Vinnie Johnson. The company quickly established itself as a supplier of choice for major international automotive companies, particularly Ford Motor Company and GM. Today, Vinnie serves as the Piston Group's chairman and CEO, right? Under his leadership, the Piston Group has expanded from a single facility in Detroit to multiple locations across the Midwest, including Michigan, Ohio, Missouri, Kentucky. Mr. Johnson has led the company through successful joint ventures with industry-leading firms such as Lear Corporation, Continental, Tees, and Sachs Automotive. He also served as the chairman of the board of directors for the joint ventures JJ Automotive LLC and Passa Modules LLC. In addition to his philanthropy and charity work, Mr. Johnson is a member of the Michigan Minority Business Development Council and the Detroit Chamber of Commerce. Right? He's part of the Chamber of Commerce. He's part of the Minority Business Development Council. You could actually go to a meeting at the Michigan Minority Business Development Council and possibly meet Mr. Vinnie Johnson, who's the CEO who runs the 4th largest Black-owned business in America. Do you understand how big that is? The 4th largest Black-owned business in America. Now, here's the interesting thing. Whenever I go to these places, they start talking about money and start talking about business. I never hear them talking about the successful business that have come before us. We never look at history. We never like, okay, well, who's doing it well right now? Okay, what can we learn from them? Let's implement this in our meetings and our discussions. No. In our infinite wisdom, we're going to come up with some new ideas versus just, mimicking what has already been successful and do it in a new way. All right, Mr. Vinnie Johnson, he was in an article in Automotive News back in October 23rd of 2017. Again, he won championships in 1989. This is an article that you guys can come and read at a later date. I just wanted to look at Johnson Suburban Detroit Auto Parts Business Piston Auto Group last year reported $175 million to acquire Irving Automotive. That's when he did that, a suburban Detroit supplier of interior trim and seating components from the troubled Japanese airbag supplier Takata Corporation. So they went and bought the interior trim seating component business, Irving Automotive Parts. Plenty of bigger acquisitions have been made news of late, but Johnson's deal is a potential game changer for him, transforming his privately held Piston Group, a certified minority business enterprise, or MBE, focused primarily on assembly work, into a major league automotive industry supplier with a shot at supporting vehicle programs globally. Now, here's what I want you to see about Mr. Vinnie Johnson. Where am I looking? Is it here? Look at what he says. Vinnie Johnson says this: if you want to stay in this business, you don't have a choice but to be a global player. Everybody put in the console global. If you want to stay in this business, you don't have a choice but to be a global player. What does this say to me? It says that I got to start thinking bigger. All right, I can't just think about, just my local area. I can't just think about just my neighborhood, right? I got to start thinking bigger. There are opportunities across the world, and we have connection to the world through this thing called the internet, through our smartphones. We got to start thinking bigger. We got to go from thinking about local to global. Local to global. Mr. Vinnie Johnson, today, we salute you here on the Money and Power Show, the New Black Wall Street. Well, guys, this is what we do here on the New Black Wall Street, the Money and Power Show. Get black folk talking about money and the markets in the morning. In the comments below, I'd like for you to share with us something that you learned today, something that you took away from today's broadcast. Because we don't do this just to do this. We do this to empower you, to educate you, to inspire you, and let you know that you can change if you decide to do so. You can learn about money. You can learn about business. It's not too late to start, but you got to start. You got to begin. We invite you to join the Black Billionaires Club. Black Billionaires Club, we do have financial literacy classes. We got a New Black Wall Street book club. We start to read and learn from history. We got personal development mastermind groups to help you become a better version of you. We got business development mastermind groups to help you grow and scale your business. We got profit opportunities to help you to give you the opportunity to make more money, right? And then on the other side of that, plus that, we do have a new membership. Now we're going to start talking about investing. You're at this place, you say you want to invest. You want to get into stock market investing, real estate investing. You want to learn about how to invest, how to make your money work harder for you than you work for it. Well, we do have that as well at our silver membership. We invite you to take a step and learn what you don't know about money, because what you don't know is hurting you. Was this worth your time today, and why? Put that in the comments below. Was this worth your time today, and why? This is the New Black Wall Street, the Money and Power Show. And we've covered today's stock market recap. Looked at the stock market. Facebook up 11% today, yesterday. General Electric up 11% yesterday. Did you get any of that? Are you an owner of any of those companies? I'm an owner of Facebook. That's why I'm excited about my 10%, 11% increase in a day. We looked at Walt Disney today. Looked at their dividends. Looked at their company. Looked at their their financials. We dug into the Dow with Walt Disney. We did a billionaire breakdown of the 24th richest person in the world, Lee Sean Key. We also took a look at our Black-owned business spotlight today, the 4th largest Black-owned business in America, Piston Group. The CEO and founder of that group, former Piston, former bad boy himself, the microwave Vinnie Johnson. He has success in basketball. He's having success in business. Ms. Lyra said, I must stop thinking local to global. You must stop thinking local and start thinking global. Okay. Oh, happy birthday. Oh, look at that birthday. His birthday today. Happy birthday. He said instead of taking a trip, right, he's going to go buy some stock. Right? He's going to invest in himself and in his family and his future and his fortune. Fantastic, brother. Fantastic. Well, guys, I want to say thanks so much for tuning in today. We really do appreciate you showing up. We really do appreciate some support. We really do appreciate every like. We appreciate every follow. We appreciate every watch party. We appreciate every invite. We appreciate you just for showing up. Well, we hope that you would join us in this journey to not only just financial freedom. No. That's just the beginning, right? We invite you on this journey to legacy wealth building so we can leave an inheritance to our children's children. Well, I'm ERGJ, a certified financial educator, CEO of ERGJ Enterprises, ERGJ Black Bazaar, international best-selling author of the book, The Black Billionaires Club, founder of The Black Billionaires Club, where we study Black wealth. We learn what they've done, we do what we do, and we have similar success. I want you to remember this, that it takes a village, but it starts with us. Let's build these businesses. Let's build these bank accounts. But most importantly, let's build each other. And let's do it together. We all we got, people. But guess what? That's enough. Now, I pray to God preserve each and every one of you. This is a fantastic Friday. I want you to go out today and be great. And hopefully God gives us another opportunity to meet again Monday, 7 a.m. Eastern Standard Time for the next episode of the Money and Power Show. Until then, Mr. DJ, hit the music.
The new Black Wall Street. Thanks you for joining the show. We gave a lot of great tips, but it's time to go. Take the knowledge we shared, hope you use it and grow. We'll see you all there at the next episode of the new Black Wall Street. The new Black Wall Street.